Hey everybody, this is Jim at SP500chart.com. It's a little bit before 3 o'clock on Sunday afternoon, December 28th, 2014. We're entering our last week of the year, and it will be a short week because of the New Year's. But we're going to take a look and see what happened in this past week, and also what happened on Friday. Before we do, I just need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. The first thing I want to say, and I'll make an announcement about this in the future as well. If you want to find these weekly review videos in 2015, you're going to have to go to SP500chart.com. There will be a section at the website where these videos will be posted. And you'll see it there. I will probably keep 2 or 3 weeks worth of weekly reviews for people to look at. And the weekday videos, Monday, Tuesday, Wednesday, and Thursday in 2015, those are going to be for subscribers only. You know, I would release the videos every day, and it would get, frankly, kind of hard to manage to so many videos for people to try to work through. And not only that, I think that I just think I was cluttering things up a bit. So I'm going to try to do things a little differently in 2015 to bring more value to subscribers. And you know, the thrust of the site has always been what's going on with the S&P. I know I've had a couple of other stocks that we've talked about, and I'll from time to time post another chart, but really this website is all about trying to get a handle on what's going on with the S&P 500. So this past week we had overall strength, but to be honest with you, you could see here it is right here, the 22nd, 3.5 days of trading, and really just a slight upwards to sideways action, somewhat reminiscent of what we saw back here. Remember, back here we had this double dip and then a big dip. Then we broke out over this neckline. Then we just started to melt up. Then we broke down, by the way, double dip, big dip, broke out, and now we're melting up again. So the correlation between what we see on this chart taking place from here, I tell you what, I will draw, instead of a box, I will draw a rectangle because I think it'll be more appropriate. This is kind of where I think we are. This is the larger version of this. If you look at what has taken place in this range and what has taken place in this range, it is almost identical in shape, form, and even, I think, in function. And that is, a strong move has to give some of it back. It gives it back rather rapidly, and that's perfectly typical, guys. They say that the markets spend 2/3 of their time going up and 1/3 of their time going down. And that 1/3 going down is almost always at a steeper pitch than what was seen going up. You can see it in any chart you look at. Here we go up for about a little bit more than a month and a half. Then we come down in a little bit less time than that. We go up, then down quickly. Up for a while, down quickly. Up for a while, down quickly. Up for a while, down quickly. Just the way the markets are, people tend to create more velocity when they're scared than they do when they're accumulating shares. So, let me go back to our 30-minute chart. So what you can see here is, I think it's the same thing. I think we went up for a while, down quickly. Now we're going up for a while. Folks, at some point, we're going to come down again, and it'll be quickly, because it historically is. But this target that we have from this kind of not quite properly shaped inverted head and shoulders pattern, I think is still right now the most present trading force that we're looking at in the S&P at this point. And that has a target of about 2120. Now, you may look at this chart and say, well, Jim, is it possible that this is a left shoulder, this is a head, and this is a right shoulder? Sure, that's possible. But before that would be anything that we could confirm, we would need a big breakout that's going to really take us, I think, we would need to pretty quickly get over 2150. If that were to happen, then I would start to look at this and say, with that move, is this a large inverted head and shoulders pattern that formed since the end of July? You'll notice there is no neckline on this chart to that effect, because I'm really just not exactly sold on that idea right now. But if we do get to where it looks like we are breaking over that region, then I think I would probably want to revisit that. But right now it's kind of hard for me to make that call, because we have a number of trend lines that are on this chart that are fairly long, have fairly long and rich histories. This one's has more than a year right here. Matter of fact, it's got more than a year and a half. This one right here, even though it hasn't been touched in a while and has gone for long stretches without being touched, it goes back quite a ways, as you can see, all the way back to 2010. So all of this to say, it looks like this market has still some strength in it. But if we do not at some point get over some of these rising resistance lines, then it's looking to me as if this market may be, even though we're seeing some gains on a day-to-day basis and we're setting new highs, if you look at the overall shape of things, it is somewhat wedge-shaped. So if we continue to stay in between these resistance lines and this support line in a wedge type shape, that is kind of telling me that at some point in time, and probably in 2015, we could be in for a fairly serious correction. Does that make sense? In other words, we've seen wedges in charts, rising wedges before, and we know that the eventual outcome is almost always bearish. We have been in a big rising wedge for years now. And if we start to break down some of these lines in a serious way, then I would be concerned. And that's why when we, at least in the short term, in October, when we got under this line right here, that was really giving me some concern. We recovered nicely from that, but that still was like the first hint that maybe the market is starting to break down just a little bit. Was that? I'm trying to remember if that was when the Ebola thing was kind of in the news. It might have been. But anyway, guys, as far as the week went, there it is. It's just sideways to up. We are right around some support and resistance lines where we are right now, and there's no real strong indication that we go up or down in a short-term direction from what I'm looking at right here. Because for one reason, we saw before that when we were kind of in that little lazy section that we had coming off of this bottom, if this relates the same, then we're about here, which means I think we have room to make that 2120 and not really necessarily do so with a strong upwards move. So, just seeing, in other words, just seeing the completion of this overall form that we saw in October through the first week of December, if we get that same form going into the new year, I think we can get our 2120 and have it look just like a scaled down version of what took place between the second half of October through the first week of December. So guys, I think it was a good week. We knew that we were looking at probably some upward movement once we came out once we broke out over this orange line right here, which we did the previous week. And then we got out over what looks to be maybe another one of those truncated inverted head and shoulders patterns. Again, left shoulder, head, not much of a right shoulder. This would be like the fourth time I think we've seen a pattern that looks like this. We also are in all-time new high territory, but like I said, very close to some resistance lines, and either these resistance lines need to get gone by breakout, and if that's the case, maybe we're looking at a big inverted head and shoulders pattern. But if we get turned down and we start to come back down to this red line at some point, then I think we need to keep a very close eye on this. I don't think the psychology is there yet for a real major top to be put in, but I did read that there were record inflows into funds in the month of December. So just keep your ears to the ground, keep your eyes and ears open to the chart. Right now, I still think we're good for 2120, but once that target is made, I think we need to make a fresh assessment of the chart to see if that is a short-term top or if that is maybe setting up something a little bit more ominous. I don't see it yet, but if we start, in other words, if we were to come down at some point in the new year and challenge this low that we set back in October, or break through about what was our low back then? Was 1820, 1820s? Yeah, about 1820. If we were to come down through at some point through 1820 in 2015, then I think that would be a good point for us to take a pause and say we've had a bull market for almost 6 years. On average, they last about 4.5 to 5 years. Maybe the averages are catching up with us. Not time to panic yet, but I think it is time to have that thought in the back of our heads that the historical duration of a bull market combined with what we see in this chart as just getting more and more and more and more squeezed out into the end of this large, very large converging pattern, I think it would behoove us to be very open-minded even when we see the markets setting a new high. So guys, I'm going to call that quits for the video for our short week, our Christmas week. And hey, I appreciate you taking time out of your day to watch this. Thank you for your support, and remember, go to sp500chart.com to get your free weekly S&P 500 review. And thanks for your time today. Take care.